Hello, amazing entrepreneur. It's Tash Corbin here, and welcome to another episode of the Heart-Centered Business Podcast. This is episode number 272, which means you can find all the relevant links and show notes for today's episode over at tashcorbin.com/272. In today's episode, we have a fabulous question from Catherine, and I'm going to answer it, but with a lot of caveats. And her question is about how much money she should put away for tax and investments. So let's dive into this one. I'm not a financial advisor, not a financial planner, not a tax accountant, not a bookkeeper, but I can share my own personal experiences and what I wish I had done differently if I was starting over again. So that is the lens through which I'm going to share. If you feel like you need some support in this space, dive on into this episode. I've got some great resources at the end where I can point you to other people as well. Let's dive in. I'm Tash Corbin, and this is the Heart-Centered Business Podcast. So, before we begin, I will just say again, not a financial advisor, not an accountant. I do not recommend that you just take my word for this. I highly recommend you invest time and money in becoming knowledgeable in this space and getting personalized advice. The advice that I'm going to be sharing today is very general in nature. It doesn't take into consideration your personal circumstances. It is simply me sharing from my perspective what I did and what I wish I had done when I started my business. So as long as we're on the same page about that, let's dive in. Thank you so much to Catherine Elwood for submitting this question. If you would like to ask me a question, you can do so at any time at tashcorbin.com/question. And if you pop a question in there, just like Catherine did, I might just answer it on the podcast. And the reason why I wanted to come and do this episode is not because I want to suddenly, be seen as a financial advisor. Definitely don't. But I do wish that more of the people that I had followed when I first started my business were open about the finances and behind the scenes in their business. And there are a couple of people I followed who were very open about it, and I'm so grateful for them. So I figure I want to contribute to that conversation. And Catherine asked, I'd like to answer. So I've got 4 things that I want to cover off with you today. First and foremost, having separate accounts for your business. Now, I feel like that might come as a surprise that I would share that, and it seems like a really basic piece of advice that I would be sharing, but it blows me away. Every time we run conference and we have this conversation, every time I'm on a call and we have this conversation, how many people say, I still don't have a business bank account? It's a non-negotiable. Have separate accounts for your business. In most cases, you can find a bank that will do it for free, or a building society that will do it for free. In some cases, it's a legal requirement, and it's such an important energetic boundary. Set up a separate bank account for your business. I feel like it's such a basic thing. It's such a basic energetic sign to the universe that this is a business, and think of the magnetism and the power that would do and that would send out to the universe for you and the ripples it would create. So many people still haven't done it yet. So I'm just going to say it. Separate accounts for your business. Now, something that I did after a year of being in business was I also set up a second business bank account that was for my tax. And so when money started coming in, I put my tax aside. Now, the reason why I did that after a year of being in business was because after a year of being in business, I did my taxes for the first time, and I had a $19,000 tax bill. My business was really successful in its first year, and I didn't realize how much tax that was going to cost me. And so I am really grateful for the person who kicked my butt into gear and made me open up that separate business bank account for my tax and start putting a good chunk of my income away into that tax account, because I honestly underestimated how much of my income would need to then go into my taxes. And so number 1 is set up those separate accounts, and bonus point, set up a tax account as well. I think it's really powerful. I'm going to recommend some resources at the end of this episode that talk about like multiple bank accounts. And I would say try it and see if it works for you. But for me, those 2 have been in my business forever since I've done that. And even now, when I've moved to a PTY Ltd company and I've had to go back into just having one business bank account, I still at any moment in time know exactly how much in that account is for my tax. And when I get back to Australia and can open a second account, I will. I cannot do that from New Zealand because my business is based in Australia. I need to actually go to Australia to do that. And so I will do that as a priority. It is really important to me because if I see the money there, I'm just one of those people who I see the money there and it puts me in a space, like there's a big energetic thing for me. And so putting it into the tax account for me is really powerful energetically. And I'm definitely going to be going back to that when I get back to Australia. So separate account for your business and bonus, separate account for your tax. And if you want to go even more, you can actually separate it even further. But we want to get the basics done here. So, and if I was to go back and start again, I would just do business account, tax account, especially just as I'm getting started. Now, number 2, I didn't actually invest outside of my business until 2018. So I started my business in 2013. And even when I first started my business, I was really fascinated by investing and stock market and shares and all of those sorts of things. And it wasn't until I discovered micro investing apps in 2018 that I actually took the leap and started investing outside of my superannuation, which for those in the States is like 401k, that's your retirement investments. Now, I did not put any money into superannuation between 2013 and 2018. I put money into superannuation now. But at that point in time, my cash flow was really unsteady. And I also felt like the best space I could invest into was into my business because I was in that growth stage of my business. I needed to hire team members. I needed to invest into ads. I needed to get to scalability. And so I made a conscious decision not to put money into my super between 2013 and 2018. Now, all of that being said, I think there's huge power in just putting something aside and putting something away. And I wish that I'd put money into my superannuation a little sooner. And I definitely wish I'd discovered micro investing sooner. I don't even know if it existed before then. But micro investing is definitely a thing now. And if it's available in your country, I highly recommend that you do at least something. When it comes to superannuation, I was very, 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 very fortunate when I first started my business to already have multiple 6 figures in superannuation because I was very well paid in my corporate job before I started my business. So I also knew that even if I didn't contribute another cent to my superannuation from the day that I started my business until the day I retired, I would still retire in all likelihood with more than, a couple of $1 million in my investments because of the, long-term growth of stocks and shares, my age, huge difference. This is why I'm saying this episode does not take into consideration your personal circumstances. I would say if you are over 40, you really want to prioritize your superannuation. If you are very young, you might want to prioritize things like micro investing and just small amounts into your superannuation. There are huge tax benefits to putting money into superannuation versus putting it into other investments. There's, do you own your own home? Are you in the property market? Like there's so many different questions. What's your risk profile? I am not here to give any advice around that investment. But I can tell you, I did not invest outside of my business until 2018. I wish I had started micro investing when I first started my business, just to be able to see that little tiny amount of money going in each day or each week and seeing that balance go up. It taught me so much about my money mindset and my energetic limits on how much excess money I can have lying around as well, which is really powerful. And also I wish I had invested into my superannuation sooner. That being said, some of the investments that I made into my business, instead of making them into superannuation, paid off by returning like tenfold their return on investment immediately. And then that created so much more money for me to be able to then invest into my business and into my superannuation. So can't predict the future, can't know what would have happened, But I do think the sooner you can put some money aside into investments and into retirement accounts, the better. Number 3, play with your percentages. And this is something I did not do. So when I first started putting money away for tax, I started by putting 20% aside, and then I didn't adjust it at all. I never paid attention to how much extra I had or how less I had or any of those sorts of things. I would literally, when I did my tax disbursements, I would go and get my taxes done. So whether it was my quarterly business activity statement, which was my GST, or whether it was the end of year financial year tax, I would literally have my bookkeeper send me, okay, this is how much you're going to need for your BAS, and this is what your quarter's PAYG tax will be. I would pay those, keep the PAYG aside, and then anything that was left, I would put it into my business bank account and spend it. Silly mistake, because as my income grew, so did the percentage I should have been putting aside. So a couple of times I was short and there was money in my business bank account, so I just filled the gap with the money that was in my business bank account, but I didn't adjust my percentage that I was putting away. I really need to be at the 22 to 25% that I'm putting away now, much better at that. And I actually have the exact amounts month by month from my bookkeeper and financial coach that I work with. So that makes it much more precise for me at the moment, which is really sexy, and I love that. But do play with those percentages. And, you can just start, I think in Profit First, which is one of the resources I'm going to recommend. I think they recommend to start with 20% or maybe 25% and adjust from there. So maybe play around with that, but do pay attention and don't steal money out of your tax account. I also made that mistake. This is like financial confessions with Tash Corbin. All right, number 4, the most important advice I can give you around tax and investments is pay attention to your money and build a system for managing your money. One of the big questions that people ask and one of the big goals that people have when they are starting a business and they're trying to grow their income is, how do I never worry about money again? Or my number one goal is to never have to worry about money again. There is a big difference between worrying about money and managing your money. And a lot of people conflate those two things, and they think that by never having to worry about their money, they never have to manage their money. That is absolute BS. Multi-billionaires still manage their money. You still need to manage your money. You still need to know what's going where. You still need to know what's going in. You are the responsible party. And so if you don't sit down and have a money date with yourself or something similar, at least weekly, put that in your calendar, make it a non-negotiable, and do it. You need to pay attention to these things. Putting your head in the sand and ostriching when it comes to your money is the way that you create money worries, because then you don't know. You don't know if you're going to have a big tax bill. You just worry about having a tax bill. You don't know if you're going to end up with the right amount in your investments. You just worry about your investments. You don't know if you're setting yourself up for retirement. You just worry about retirement. And it's so important to notice and identify that behavior. You don't want to worry about money, so you don't look at money. But looking at money takes away money worries, because the best thing you can do for your money is have a plan. So when you look at your money, it might not be the money situation that you want to see. But the most important thing is that you look and you make decisions and you make a plan about how you are going to move it towards that money situation that you do want. You don't just decide, oh, I just need to get lots and lots and lots and lots more sales and hope that it somehow works out. I didn't get to that point of feeling like my money stuff was really amazing and I was making enough sales until I did the money management stuff. That is what created the release of what money worries. It wasn't that I magically made more money. It was that I started managing my money more actively and I paid attention. So that is my number one piece of advice. Pay attention to your money, get your head out of the sand, build a money management system of some sort, have regular money dates with yourself, and make a plan. If you are ignoring your money, ignoring your finances, you will have money worries because you won't know. And it is better to know. If you've got overdue taxes, get them caught up. It is better to know. If you're in Australia, you can normally negotiate a payment plan. It is better to have a plan, and it is better to know. If you haven't done your taxes, get them caught up. If you haven't been putting tax aside, put money aside. If you haven't got a separate business bank account, do it. If you don't regularly look at your money and manage your money, put it in your calendar and start doing it. I know that I'm getting very lectury here in my tone of voice, but this is something where I see women really hold themselves back and keep themselves small because of some kind of subconscious or conscious belief that managing their money somehow will make the situation worse, that looking at their money somehow will make them feel really depressed. You get to choose when you look at your money how you feel, and the only way you can fix it is by knowing what's there, making a plan, and managing that money. So pay attention to it. All right. Now, as I said, I'm not the expert here. I just wanted to share my own experiences and my advice that I would give to myself. That little lectury bit that I just gave to you, that is what I would say to 2013 Tash. If I could go back and whisper in her ear, I wouldn't be whispering. I would be yelling, and I would be drilling it into her because I've put myself in some really tricky situations by not managing my money. When things got tricky, I would put my head in the sand and ignore it, and that just made it 10 times worse. And I wish I could go back and give her a little lecture on those. Anyway, I've got some great resources that are for you from experts in this space. Number one is the book Profit First by Mike Michalowicz. I'll put a little link to it in the show notes. Not an affiliate link or anything. Just go and get Profit First. Have a read of it. Really powerful book. It's got some great systems in there. You don't have to go full in with the system that Mike talks about in Profit First, but understanding the concepts and principles and just getting started is really important. So go and read Profit First by Mike Michalowicz. It's the best $14.95 you'll spend on an Audible credit. Seriously, go and grab it. Actually, I wouldn't necessarily say Audible, like audiobook. Yes, it is a good audiobook to listen to, but there's also lots of written-y bits. So I actually did both. I had the audiobook and I had the physical book. So maybe get both of those. Number 2, Get Rich Lucky Bitch, book by Denise Duffield Thomas. Now, this isn't a money management book. This is about growing your income and releasing all those limiting beliefs around, I just don't talk about money. I'm just not good with money. Money is a man's job. All of those sorts of things. I listened to Get Rich Lucky Bitch on audiobook, I would say 200 times between 2013 and 2016. And I still love that book. My version of that book is so dog-eared. And then I got a second copy and got it signed by Denise at one of my conferences. And even that one's got Post-its all through it. And Honest Dave, my partner, he would be able to recite passages from Get Rich Lucky Bitch off by heart to you. It completely changed the way that we looked at how we spoke about money, how we behaved around money, how we viewed money, conversations with others about money, conversations with each other about money, our thoughts around money. Life-changing. Go and grab that book as well. Get Rich Lucky Bitch. That's an awesome audiobook. Denise reads it herself. The third one is a book that's coming out soon, but is available as a podcast. And that is called She's on the Money, especially if you're in Australia, New Zealand. I think it's quite relevant. There would be other ones that are more relevant. I've got a USA one to share next as well. So the podcast She's on the Money is about that investments piece and looking after your future self and some of those things. It's mostly focused on millennials who are in a job, but there are some really juicy little tidbits in there. And it's really great for understanding the basics of investment and finances. She's on the Money is the name of the podcast, and it's a podcast by Victoria Devine, and Victoria is also releasing a book called She's on the Money this year. So keep an eye out for that one as well. And then another podcast I would recommend, which is in the States, is Hello 7 with Rachel Rogers. And Rachel also has a book coming out, I think, in April of 2021. So this month, last month, I think, based on when this podcast goes out, actually. And so that book is called We Should All Be Millionaires by Rachel Rogers. And her podcast is called Hello 7, as in Hello 7 Figures. So that's a really good one as well. Very intersectional. amazing perspectives from different backgrounds and different cultures, as well as understanding the impact of our ancestors and our money mindset and all sorts of things as well. So the podcast is Hello 7. The book is We Should All Be Millionaires. Should be out by now when this podcast drops. So they would be the resources I'd recommend. I'll link up to those at the show notes. So go to tashcorbin.com/272 for the links to those, and I'll make sure I pop those in the show notes of today's episode. Now, this has been a particularly juicy episode, so I would love for us to continue the conversation over in the Heart-Centered Soul-Driven Entrepreneurs group. The reason being also is that we do have financial advisors and financial planners and accountants and bookkeepers in the group who will be able to give you more detailed advice as well, and you'll be able to connect with them through this conversation. So if you would like to come over to the group and continue the conversation and ask questions, just use #podcast_aha. Let me know you've been listening to episode number 272, and you can ask questions. You can share any light bulb moments that you've had, or make a commitment to taking some action in this space. It's a really important one to take care of, which is why I wanted to answer Catherine's question. Thank you so much, Catherine, for asking. Thank you so much for joining me for this episode of the Heart-Centered Business Podcast. Until next time, I cannot wait to see you shine. Big love from me, and bye for now. Would you like more tips, tools, and resources to help you grow your heart-centered business? Head to tashcorbin.com today.